All right, we're on the SPY weekly chart. As you can see, we had 4 weeks of continuous selling starting in middle of February and basically ending with a weekly bullish hammer candle in the beginning of March. And we closed in a green week, slightly green, 0.2% higher for the first time in 4 weeks. So let's get into this analysis. We always want to focus on S&P 500 when we do our analysis because most stocks are going to follow the index. So that's where we want to base our analysis on. That will help us get our footing, get our bias, and trade better and follow the market so we can make better investment decisions. So I just wanted to point out on the weekly chart really quick that every time we've had a dip or a pullback or maybe like more than 2 weeks of continuous selling, like here, this is in July 2024, and we see like a bullish potential reversal candle, we always see follow through on that. See, so we bottomed here, bam, up, big time on that one. This was a 4% week. And this dip over here in April of 2024, we get a bullish candle, get some follow through, bam, bam. Even back here, we had a pullback. Even at each leg of this pullback, this is in August of 2023, 1, 2, 3 weeks of selling, green candle, follow through. 1, 2, 3 weeks of selling, 4 weeks, bullish candle, some little bit of follow through until we finally get a really big bullish engulfing candle. It's almost a 6% move in 1 week on the market. Last week on my video, I said that, we should expect a dead cat bounce. That's typical. Markets don't move in a straight line up or down. So we've seen the market pretty much move in a straight line down. So it's, everyone is assuming we're going to see some kind of bounce. So when I mean everyone, I mean retail traders. Some institutions like JP Morgan was giving out reports saying that, it's around that time that we see some kind of price bounce. And it was very muted this week. Unless this next week we see some nice follow through with a bullish candle like that, then I'm still pretty bearish in the medium term. And I'll flip to the daily chart and I'll show you why. So first, the definition of an uptrend in the medium term and the short term is higher highs and higher lows. So this is a high, a low, higher high, higher low, higher high, almost made a lower low, but same low, okay, same high, higher low, breakout to, you get the idea, wave patterns. Look at this move here. This move broke down below our previous low, and now we have made a lower low. I'm expecting us to make a lower high. So that's one reason why I'm bearish in the medium term. This is a trend reversal pattern where we break below the previous low. I mean, we broke way below, it's not even close. We formed a lower low here, and we're expecting to see a bounce. And this bounce, I'm expecting it to be a lower high, maybe over here. If we break above this level, maybe over here. I mean, who knows? The only reason or the only way I would flip bullish in the short term and medium term is if we can basically make a V-shaped recovery and retest the all-time highs again, which, is probably not likely given the economic backdrop that we have with the tariffs and inflation concerns and unemployment concerns with the federal government cuts and all that stuff, which I'll go over in a bit on my fundamental analysis section of this video. So one indicator I love using, which I recommend to plot on your SPY charts on the daily chart, is a VWAP-Q. Every video I talk about it. It's VWAP anchored at the beginning of each quarter. And basically how you read it with this white line here, prices above, bulls are in control. Prices below, bears are in control. AKA This gives you a nice short and medium term bias. So basically for me and my followers and my members, we have been biased bearish since this breakdown of AVFQ in the end of February. You can see price broke down, tested 1, 2, 3, 4 times before finally giving up and breaking down. So this whole time throughout this drop, we have been bearish. We have not been aggressively buying dips in our long-term investments. We have not been taking any kind of bullish trades. Any kind of trades that we were in or that were bullish were left over from maybe like before this bounce, and we're managing it, cutting it down, rolling it, etc., managing it basically to avoid losses altogether or minimize our losses, and taking short trades if you wanted to. Every day, every morning, I post a little quick market analysis sentiment little thing on Discord, which I have a free Discord server. Something like this, where it's really quick. I just tell you, you know, what kind of bias you should have, long term, short term, quick synopsis of like what to expect with the market today. So I'll post a link to that server in the description below. It's again free to join. My goal is just to help investors and traders make more money, be more profitable, be more confident in their decision, and that's just what I want to do. So, so yeah. Next thing, I also provide trend signals in my Discord server for the market indexes and for individual stocks too. So I'll pop those in, and you can see on my screen. We have been on a sell signal since February 24th, 2025. So we have a sell signal, we have price below EVFQ, and we have a break of the previous swing low. That is like, you should be bearish in the short term and medium term. You know, if you follow my videos, which I know I just started, but at least if you are in my Discord server, you would have been having this bias way before, end of March. So that's what I'm seeing. That's why I'm bearish in the short term, medium term. And so I also just want to go over where I think price could go next. So I'll go ahead and turn the signals off, and I'll turn the volume off. So let me turn on the moving averages. So on my daily chart, which if you're an investor or trader, you should definitely have the simple moving averages plot on your chart. The 50, the 100, the 150, the 200 at the minimum. And right now my colors are blue is a 50, gray is a 100, green is a 150, and pink or purple is a 200. So I told you my short-term and medium-term bias. My long-term bias is still bullish, maybe slightly neutral, but overall still bullish. And the reason why is because the 50-day moving average is above the 150-day moving average, and the 200-day moving average is sloping up slightly. So what would make me bearish in the long term? AKA, what would make me hold off on buying dips, be more conservative, and expect some kind of like a recession? I want to see the 50-day cross below the 150-day. Not just cross below, but I want to see both of the moving averages start sloping down like this. And I want to see the 200-day start sloping down. That would tell me that price is entering a long-term downtrend. The last time we saw that was in 2022, which I'll show you. So you can see the 50-day, the blue, cross below the 150-day right here, is sloping down. The 150-day starts sloping down about 2 months later. So now we have the 50-day sloping down, the 150-day sloping down, and we have the 200-day sloping down as well. So at this point here, in 2022, I was like, I'm not going to be aggressively dip buying. I bought these dips here in my long-term investments. I took maybe some bullish swing trades. When I saw this, I said, hey, I'm not, you don't want to try to catch a falling knife. This is where now you should be in a very long-term investing mindset where you have patience when you wait for this for bottoms to form. You don't buy on every dip that you see because the market can just keep falling and falling and falling. You wait for some bottom, maybe like a little retracement, then you add to your investments here. You know, you start seeing the market drop, you wait for some bottoming to form, and you add to your investments here. All the way until you see basically the opposite of this signal, which we saw in 2023. We see the 50-day moving average break above the 150-day here, January 2023, and they both start sloping up. That is a good signal. Not only that, we are starting to form higher lows and higher highs. And then finally, the 200-day moving average starts sloping up in April of 2023. Now, if you have any cash left, if you're on the sidelines waiting to just go in on the market, this would be the time right here. Doesn't matter, you don't try to time these individual days. Like your long-term mindset, you're holding these for over a year. You go heavy here and you ride that wave. And look at this bull market we've seen since then. If you entered here at these signals and if you follow my analysis, even after this 10% drop, you would have been up 36%. So I digress. So let's continue. The most recent moving average, which I actually heard of recently only, is a 300-day moving average, which I have plotted here in red. And I find it very, very interesting because the market reacted very well off this level here. And in the past, it has shown to react well off this level, like back in 2023 in October. It provided resistance here in February 2023. It provided support here in 2022 January. So I'm not familiar with this. I'm just starting to look at it. Please drop a comment below if you use this 300 moving average or if you've heard of it or if you find success with it. I'd love to know. But now I have it on my chart and I see that, we bounced off it. Very cool. So I don't have much more analysis besides that. I just see it as like a potential good level to add to your investments on because that just marked like the 10% drop level right here. So we'll keep an eye on that. Now, where do I think price can go? So, I last week mentioned that I think it's typical to see at least a 3 to 4% dead cat bounce after a big drop. And it's easy for it to go even higher than 3 to 4%, but at least at 3 to 4% is what I've seen in the past charts. I've seen always a 3 to 4% bounce, which from this low would have taken us to the 200-day moving average basically. And we couldn't even do that this week. I mean, just another reason to be a little bearish. I mean, look at these other drops here when we have in the past. I mean, we see a drop and that bounce is a bounce. Like this one was big bounce from the lows before it even started faltering was 8%. If I go back even on this drop over here, I mean, we bounced at every step of the way down. These support levels were holding and we've seen meaningful bounces, 4.5%. We've seen 3.7%. Even in 2022, at the start of the bear market, we had this big 12% drop and we saw a bounce from these lows like 5.8%, testing the 50-day moving average. I'm not seeing that, and that is concerning. This is my opinion, of course. I know, not financial advice, blah, blah, blah. This is my opinion. So another reason for me to stay bearish in the short term and the medium term. So I think if next week I'm 50-50. If we move to the upside, we could still at least hit that 200-day moving average, which is around 574. If we can go even higher than that, I think we'll be able to test this recent swing low here at, what is that, 570, 550, this level right here. Because based off the technical trend reversal pattern, we tend to break below and then test it. So I don't think it's going to go higher than that. If I only just plot AVUP real quick, I mean, if it goes higher than that, that would make me more neutral and more bullish. It will, because recovery of this low here would be a bullish sign. I want to see it hit AVUP which is right now at 586. If we break above AVFQ at 586 next week, I will be bullish again in the short term, you know? So that's where I see on the upside. On the downside, though, we just finished a 10% drop. It's typical for markets to experience 15-20% drops every so often. So I think the next target is going to be 521.50, which would be a total of a 15% correction from the all-time highs. And this level here corresponds around the area where we had the top in March 2024 and around the area where we bounced here in May 2024 and where we bounced on this drop in July 2024. So 521.50 on SPY is my next downside target, and my maximum upside target is 586 on SPY. Let me go over some Heiken Ashi analysis. So if you don't know about Heiken Ashi candles, I recommend reading about them. I plan on posting a guide on them in my Discord server. Um, but they're very easy to read. It just helps you analyze the current trend. So as you can see here in February 2025, a bullish Heiken Ashi trend is signaled by flat bottom candles. So green. So flat bottom, two in a row, bullish trend. When you start seeing the flat bottom with a doji candle to a flat top candle, that is a bearish reversal signal. That came out in February 21. And then when you see two flat top candles in a row following this pattern, that is like a 100% confirmed downtrend. All the way until you see the, man, the magnet's making this look squiggly. Until you see the next doji candle, which showed up here on Friday, March 14th. That was a good sign. And we had the flat bottom candle. So we had a Heiken Ashi bullish reversal, which is, another reason I believe we would see a dead cat bounce. However, it was not able to sustain, and we've seen a doji candle, doji candle, doji candle, doji candle. So for the Heiken Ashi, I'd want to see from here, flat bottom candle, it's another flat bottom candle. That would signal a nice continued uptrend, probably to this 575.50 level that we talked about earlier. If we start seeing a bearish flat top candle form like this down here, another one, then that's it. We're going to see the next leg down. Last but not least, I want to go over this indicator called Money Flow Index. This is not my indicator. It is free on TradingView. Let me just try to find the owner of it. So let me search Money Flow Index by friend of the something. Search Money Flow Index with bullish and bearish signals. You find it. I like this one a lot. Kudos and credit to whoever coded this. They did a great job. It helps you kind of gauge where market tops and bottoms could be. It's very simple to read as well. You see MFI, Money Flow Index, come up with a red, pattern here. Is signaling a potential market drop or consolidation, which we did see. And the vice versa, when you see a green bar come below, like down here, it signals a potential market bottom, which we did see in August 2024. I'll highly recommend to add this to your daily chart. It is super useful. I found them very useful. They're, of course, like any other indicator, they're not 100%. No, it's impossible for one to be 100%, otherwise you'd be insanely rich. And using this, I could see that we have not had a bottom signal yet. So another reason to me why I see further downside. So hopefully my technical analysis on SPY really helps you kind of gauge where the price could go and what your bias could be. So of course you and research, but hopefully that was very clear. Now let's briefly go over some fundamental analysis. So these were the news that we had this week. Retail sales on Monday forecasted a growth from -1% to positive 6.6%, and we fell short of that. So retail sales did go up, but not as high as they forecasted. so signaling potential economic slowdown. Um, Building permits, whatever. The big one was the FOMC, the interest rate decision. They decided to hold interest rates at 4.5%. And this FOMC conference was a big one. Just to summarize, the key points I took from it was that the tariffs will affect inflation, but Powell said that inflation was transitory. And if you were trading in the 2022 bear market, you should have PTSD at that word like I did. But they questioned him on that, and they said, well, you said that inflation from COVID was transitory, and you were wrong about that. And he said, well, if you look at the inflation that was caused in Trump's first term, those ended up being transitory. So the Feds are projecting that their 2% inflation target has been delayed, but they still see it being hit. So, in terms of inflation, seems like there's not much concern in the longer term. The other side of it was the labor market, so employment. And Powell said that the labor market right now is in equilibrium. Not a lot of hiring, but also not a lot of firing, which is to me is concerning because if there's not a lot of hiring and firing starts picking up, like with layoffs, like we've seen with the Trump Fed cuts, a lot of cities and government agencies are reporting huge deficits, and that could result in layoffs or furloughs. If we start seeing some big tick ups in laying off and firings with no addition to the job market, we could start seeing unemployment rates start rising. That would be concerning, and that would signal a potential recession. So keep an eye on those things. We're not going to see a reading on unemployment yet next week, but next week we do have the GDP growth rate, which is forecasted to drop from 3% to 2.3%, but still positive, so still growing GDP, just not as fast, which is understandable given tariffs. And next Friday we have core PCE, another measure of inflation, which is forecasted to stay the same at 0.3%. And we're going to start seeing personal spending go up from negative 0.2% to 0.6%, but personal income come down from 0.9% to 0.4%. So the key to these economic readings is that you want to see it come close to forecasted, because whether it's a drop or an increase or a flat, the market goes by uncertainty. If they can see the path of trajectory for the economy, there's less uncertainty, and which would mean less volatility. You start seeing big reactions to economic news when you start seeing an unexpected result. So let's just say, they expect core PCE price index to stay at 0.3%, and it comes in like at 1%. That's wow. We did not expect that. Inflation went up way more than expected. They're not going to cut rates anytime soon. Now they're going to reduce number of rate cuts they have this year. Bam, 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 sell. So that's how you want to read these. I'll finish off with the Fear and Greed Index on CNN's website. We have been at extreme fear for, yeah, at least a week or two. So extreme fear, that just as an investor, that means if you want to buy the dip, if it's extreme fear, you can say, okay, it's a good time to start nibbling on some stocks in your long-term portfolio, start adding a little bit. So just wanted to show that we're still at extreme fear. There's still a buying opportunity here. We're at a 10% drop. This is a good place if you have, cash on the side. You could take a quarter of that cash, deploy it into your portfolio, and hold the other three-fourths of your cash, for a further drop if you get one. All right, I'm gonna end the video here. I know usually I go into like my trades, but I'm thinking of cutting these videos up so I can be a little bit more in depth on my analysis, a little bit more, and have these video times kind of reduce a little bit. And I will make weekly videos on my active trades as well. So maybe tomorrow I'll plan on posting a separate video going over my active trades and what I did this past week. So thanks for watching. I hope you got some value out of it. If you did, please subscribe and like. Join my Discord server. It's free. We're collaborating in there. We're learning with each other. I have a lot of great resources in there. Um, and yeah, good luck next week.